Thank you for joining us. We appreciate your interest and your trust in us. We are here to provide you with what we can, with what we're learning and trying to implement over the past few days in this very rapidly changing, even on an hourly basis, legal, regulatory, workplace, and maybe soon to be economic environment. We will see. I said earlier, I may be repeating myself, but we all wanted to let you know that we're all in this together. We are implementing these issues and approaches and trying to answer the same questions that you are. We may be a little bit out ahead of it. We may not be, but hopefully what we've been able to accomplish and what we're learning will be of some benefit to you. Just a few kind of initial items before we jump into it. We will have the capability and we'll reserve some time at the end of the hour if we can to answer questions. On your end, there should be a blue chat icon towards the middle bottom of your screen. It looks like a cartoon text bubble and it's blue. And we understand that if you click on that bubble and type in a question and hit send or enter, it will show up for us here. We will try to collate them as the hour progresses and if we're able to answer some of those questions. So please feel free to type in whatever questions you have. Secondly, just to be safe, please mute your phones. We think we've accomplished that with our technology here, but just to be safe, please keep your phones on mute. So turning next to the agenda, I'm going to allow each of the panelists to actually introduce themselves, but the agenda is going to begin with a few minutes talking about workplace policies that have been implemented and that are being tended to here internally as well by our in-house general counsel. We're then going to move to a very rapidly and quickly changing employment update. We are going to talk about public agencies and some issues facing public agencies. We're next going to address and highlight some tax and economic relief and changes that governments and regulatory authorities are implementing. And finally, ending with some contract, commercial, lending, borrowing issues. So with that, I'll go ahead and turn things over to Sherry House to begin a discussion of workplace policies.
Can you guys hear me?
Yes.
Great. I'm Sherry Haas. I'm Downey Brand's general counsel, and I drafted our firm's pandemic plan and continuity of business policy and have been working on these issues for over a month now. So I'm just going to be talking about what you should be thinking about in terms of planning for how your business is going to function in this environment. And the first thing I want to impress is want to stress is how important it is to develop a written pandemic response plan. And I know it may seem like we're past the planning stage given how far along we are and the level that we're at this point. And I know a lot of you are probably in triage mode right now, but I'd like to outline some of the things you want to be thinking about in case you haven't already. And these are also things that you should at least start to think about putting in writing if you haven't started working on a policy yet. As the current information is that it's likely we're going to be facing a second, maybe even a third wave of this pandemic, even once things get back to, quote, normal. So I think this is something that's going to be a part of our reality for a while. So the first and foremost thing you want to think about is identifying your business's critical functions and creating what I'm going to call, and what we have called at Downey Brand, a business continuity team. And then think about how those functions are going to operate. So for Downey Brand, as an example, I'll share that our team consists of our managing partner, me as the general counsel, our controller, whose critical functions are obviously financial service, payroll, and the like, our human resources director, our labor and employment counsel, our IT manager, and our office services and supplies manager, as well as one office lead for each of our offices. For some businesses and organizations, I might add, for example, a PR person. Others may have different critical functions that they would want on board. But sitting down with those people and determining what you need for your business to continue at its basic core is really key. And also is making sure that you have a succession plan or backup for each of those people. So thinking about if your CEO or your CFO is sick and unavailable, who's going to step into that person's role and make critical calls or do critical work. And then from there, a good policy should have one and to continue your operations. And ours basically has 4 stages. As a first stage at the outset, you should be thinking about what you're going to do on the prevention front all the time before any pandemic threat is reached. Things like making sure sick employees stay home, all the obvious that we've talked about a lot recently, communicating, but also communicating with any contractors and temp agencies about what their sick leave policies are, encouraging hygiene, having hand sanitizer available, encouraging respiratory etiquette, checking travel advisories, and the like. Then for the second stage, and I'd say this is what I would say this kind of kicks in around the World Health Organization pandemic stage 4 or 5, and that's probably where we were a few weeks ago, 3 or 4 weeks ago. And your policy should be covering at that point things like, what's your response plan going to include once it seems like there's an epidemic or a threatened pandemic based on World Health Organization or other guidelines. And things that plan needs to include are, first, a plan for business continuity. As I mentioned, identifying critical functions and backups, also reaching out to key suppliers and service providers. It's important to have a compiled list of those things that you can access immediately so that you can communicate with them right away and plan for disruptions to supplies, disruptions to services if you need to. For us, those things that we keep track of and reached out to were financial service providers, payroll services, insurance and benefits, major office suppliers, key computer, IT network providers, security providers. But it'll vary obviously by your industry. If you're a manufacturer, your supply chain contracts are going to be key. You're going to want to have backups for suppliers. You'll want to reach out to them either to order back stock or to see if they anticipate any supply chain interruptions based on their location, travel advisories, their workforce, etc. Also having as part of that an IT plan, making sure you have bandwidth for teleworking, a data recovery plan, a communications plan, systems to support remote access, plans to test those operations. At what point are you going to restrict visitors to your work locations? And then the second part of that stage, you're going to want to also have a plan for communications and IT. Who will communicate what information and when, who's going to provide regular updates to your employees, who will communicate any HR measures that are taken. Are your communications and network systems prepared to get vital information to your employees? So thinking about, does your company have or need a phone tree? Do you have an ability to blast a voicemail to all users? What are you going to do to get out that key information so the person who knows they need to do it does it? How will IT ramp up for telework and increased usage? And who's going to communicate with building management about their responsibilities? Third, and perhaps most importantly, you have to have a plan for human resource issues. And I drafted the policy for Downey Brand on the assumption that the CDC asked businesses to use, which was that employers and businesses should plan for a 40% absenteeism rate for workers. Now, we're farther down the road, and a huge number of people are obviously working from home and not at work in any event. But that aside, you still need to be thinking about how you're going to continue to function if a whole lot of your employees, whether they're working from home or in essential positions at a work site, get sick at once or are out with sick family members and thus unable to work. Already, many or probably most of you are also dealing with employees who have children who are out of school because schools are shut down, daycares shut down. So planning for all of that should be a really integral part of your policy. Cass, who's going to be speaking in a little bit, will talk about some of the HR legal issues that you should consider, but just in sort of a broad scope, the things that your plan will want to address are things like, what types of self-assessment will you have workers do before they come to work? How will you determine who can come to work? What if they've been traveling? What if they've been exposed? Will you be sending your employees home based on CDC guidance? What type of social distancing will you enact given the situation at your workplace? Will you rotate workers on a skeleton crew to keep fewer people in the office? Will you allow telework? Who can telework? How do you prioritize telework opportunities? Do you start to prioritize people based on whether they identify as being immunocompromised or whether they tell you they're going to be impacted by school closures. Will you have a telework agreement? I'll share that here at Downey Brand, we were very early on asking all of our attorneys to stay home pretty immediately. That was, I think, at least 3 weeks or more ago. Then we started asking our exempt employees. Then we started working toward having our non-exempt employees stay home. You know, we have a policy for our exempt employees and also an agreement for our non-exempt employees to make sure that we're staying on the right side of the labor law. And Cass will talk more about that in a moment. You know, what, if any, changes to your sick leave policy will you make in the event of a pandemic? Remember, you want to make sure that no sick people are coming to work and infecting your other employees. Will you waive a sick note? Will you allow employees to borrow leave? Will you supplement any government provided benefits? What will you do if an employee exhausts his or her available leave? Will you offer paid administrative leave? Do you have the bandwidth to do that? What will your work travel policies be in that instance, especially if you have the type of workforce that is constantly traveling? Then in the third stage, which is where we are now, you'll want to plan for when you hit full pandemic period mode. How are you going to deal with the most extreme circumstances, which we have reached? Who's going to make the call on whether to furlough workers? When will that be? You know, what can you stand? What other steps will you take with respect to supplies? A shelter-in-place order that requires employees only if they're performing the most essential business functions. And then as a fourth stage, and eventually we will get here, I promise, we're going to be done with this wave, and we're going to want to review it and plan for the next and see what worked, see what didn't work. And that's just the basics, but obviously depending on your business, your structure, your industry, there may be other considerations that you want to take. We've been helping clients with a lot of these types of questions. We're happy to help clients in preparing and working on these policies, and we'll encourage any of you to reach out with specific questions that you may have. And I turn it back to Jamie.
Thanks very much, Sherry. We're going to just go ahead and turn immediately to Cass Farinini.
Hi, good afternoon. My name is Cass Farinini. I'm a employment partner here at Downey Brand, and I can tell you that we employment lawyers live in very interesting times right now. I'm going to talk to you about three things today. And the first thing I'm going to talk about is what you should do if you have an employee who exhibits symptoms or tests positive for COVID-19. I want to note at this moment that even though there are many businesses that are subject to the shelter-in-place order issued by the governor, there are also businesses who are considered essential businesses that remain open at this time. And Becky Smith, who's going to be speaking after me, will give you a little bit more of a clue, but about what that means for you and whether you're in one of these categories or not. But in analyzing some of the things I'm going to tell you today, you need to know what category you're in order to determine whether these laws apply to you. So I just wanted to make that caveat. So let's talk first about symptoms and employees testing positive and what you can do if they're in your workplace. If you have an employee with visible symptoms, you can ask them to go home and stay at home. And you can also ask any employees that worked closely with that employee who tested positive to stay at home. You cannot administer any tests to your employees yourself. I think the three main things that you should have in mind when dealing with your employees who may be sick are their right to privacy, their right to medical self-determination, and the safety of your workplace. Those are the three main things that you should always be thinking about when dealing with these issues. So don't test your employees yourself. To the extent that you have confirmation that an employee has tested positive for COVID-19, You may choose to inform your workforce that that's happened, but you can't reveal the diagnosis to the rest of your workforce. That impacts your employees' right to privacy. And I think that's all I'm going to say about that issue for the time being. Remember, you've got a chat bubble on your screen that allows you to ask us questions. So we're compiling those, and we will answer some of those questions at the end. The next issue I'm going to talk about is what issues are raised by non-exempt employees telecommuting. As Sherry mentioned, we at Downey Brand have implemented a policy whereby the vast majority of our non-exempt employees have signed a telework agreement and are in the process of telecommuting. And the essential components of that agreement for non-exempt employees, you know, all of the same rules apply in the remote world that apply in the office. So overtime rules, meal breaks, rest breaks, all those things that these non-exempt employees are subject to normally apply when they're telecommuting. So it's really important that any agreement you have with them or any written communication you have with them, and yes, it should be a written communication, as always in the world of employment, document, document, document. Your written communication should inform them that all policies apply. Your timekeeping policies apply, and your timekeeping needs to be reported accurately and correctly. They need to take their meal and rest breaks. They need to clear overtime with supervisors if that's one of your requirements of your policies. That should all be in your agreement with them. You may also consider attaching copies of your meal and rest break policies and your overtime policies and your timekeeping policies to that agreement so that they have it for ready access whenever they need to look at it. Or at least, you know, you can say they had it at ready access whenever they need to look at it. The other significant issue with telework agreements is reimbursements. How are you handling the equipment? How are you handling the internet and cell phone? You have an obligation under Labor Code 2802 to reimburse your employees for necessary and reasonable expenses. And so you need to consider how you're going to do this. Is it necessary and reasonable that your employee have an internet connection and a cell phone to do their work at home? Most likely, yes. Is it necessary that they have a big screen TV to display their workstation on? Likely no. So you can refer them to your general reimbursement policies, so long as your general reimbursement policies will cover those expenses, and you really need to think about how you're going to reimburse those expenses, what expenses you're going to reimburse, and consider including those things in your telework agreement. You may also want to include language regarding, you know, third-party liability. Don't have guests and clients at your telework location physically. Workers' comp covers you during your course and scope of your employment. It's not going to cover other people. Terms like that are also very helpful to have in that agreement. Also important that you can terminate that agreement at any time, or that you include some sort of indication of how long that's going to continue and when it's going to end, how it's going to end. All right, so that's telecommuting. Now I'm going to move on to the federal law that was signed by the president a couple days ago. It's, what's it called? It's called the Families First Coronavirus Response Act. This is a federal law, and it impacts two things. First, it has emergency family and medical leave provisions called the Emergency Family and Medical Leave Expansion Act. It has a second component that applies to employers that I'm going to talk about, which is called the Emergency Paid Sick Leave Act. Both of these laws apply to public agencies and employers with fewer than 500 employees. Both of these laws are set to expire on December 31st, 2020. Don't feel like you have to write down everything I'm about to say. Following our webinar, we're going to shoot you an email that lists this information in an e-alert. We've got all your email addresses, so we'll forward it to you. Hopefully, it will be understandable to you. So just don't worry about, taking copious notes right now. First, let's talk about the emergency FMLA expansion. This provides 12 weeks of job-protected paid family leave to qualifying employees who have worked for the employer for at least 30 calendar days. That's a little different than the regular FMLA. The first 14 days of leave under this may be unpaid, but the employee may choose to use accrued PTO, vacation, or sick leave during those first 14 days. They can also use the emergency paid sick leave that I'm about to talk about after I talk about the FMLA. It also expands qualifying reasons for FMLA leave to include someone who is unable to work or telework due to a need to care for a son or daughter under 18 years of age whose school or daycare has been closed as a result of the COVID-19 pandemic. That's probably going to encompass pretty much everybody to some degree. But that's the expansion. It requires also emergency paid FMLA leave after the first 10 days of leave. The first 10 days are unpaid in an amount that is not less than 2/3 of an employer's regular rate of pay. Part-time employees get the number of hours equal to the number of hours that they work on average over the last 6 months during a week. There are caps on all of this paid leave. The paid FMLA leave does not exceed $200 per day and $10,000 in the aggregate. So there are caps on your obligations in this area, and I believe there's going to be tax repercussions where you're going to get deals on your taxes when this is all said and done with respect to the leave that's paid under these provisions. The paid FMLA leave does not preempt state and local sick leave entitlements. Choices of what sort of leave to use to make up the pay component, those are the employee's election. Job protection requirements for the FMLA leave do not apply in certain circumstances to businesses with fewer than 25 employees. Other businesses with less than 50 employees may be exempted from certain requirements based on regulations that have not yet been developed but are to be developed by the Secretary of Labor. So that's the Emergency FMLA. Now I'm going to turn to the Emergency Paid Sick Leave Act, which is a separate component. If employees are unable to work or telework for a qualifying reason, employers must make 80 hours of paid sick time available for immediate use by full-time employees. Part-time employees are entitled to paid sick time equal to the number of hours that employee works on average over the 2-week period. If the paid sick time is for certain reasons, the first 3 reasons I'm about to discuss, it is capped at $511 per day and $5,110 in the aggregate. If it is for the other reasons I'm going to discuss below, numbers 4 through 6, it's going to be capped at $200 per day and $2,000 in the aggregate. The qualifying reasons for this leave include that an employee is subject to a federal, state, or local quarantine or isolation order related to COVID-19. Here is where the information regarding the governor's proclamation comes into play, and Becky's going to tell you more about that. Second reason, employee has been advised by a healthcare provider to self-quarantine due to concerns related to COVID-19. Third reason, the employee is experiencing symptoms of COVID-19 and seeking a medical diagnosis. Those first three reasons are the reasons that's capped at $511 per day and $5,110 in the aggregate. The next reasons fall under the second cap that I talked about. Reason number 4, the employee is caring for an individual who's subject to an order described in item 1 above, or has been advised as described in item 2 above. Reason 5, employee is caring for son or daughter if the school or place of care has been closed or the child care provider is unavailable due to COVID-19 precautions. Item 6 is kind of a safety net catch-all where the Secretary of Health and Human Services may specify other conditions to activate this leave. Things about FMLA leave under these emergency conditions that you should know. You may not condition the paid sick time on the employee finding a replacement to cover their shift. You may not require the employee to use other paid leave provided by you before using the paid sick time. Nor may you retaliate against or terminate employees for taking leave in accordance with the Act, as per usual. Failure to provide the paid sick time is going to be considered a violation of the Fair Labor Standards Act, the FLSA. And so that is everything I have to say for now. Keep your eye open for the email that we're going to send this afternoon. And we anticipate that we're going to have more webinars along this same line, giving you further updates as things continue to unfold in the realm of employment. And now I'm going to pass it to Becky Smith.
Good afternoon, and thank you for joining us. As Cass and others have mentioned, we will be sending out additional materials. We have all of your email addresses, and so we'll be sending out our e-alerts, and these webinars will continue on as long as they can be helpful. I appreciate that you are probably feeling like many of us have this week, in that you are drinking from a fire hose trying to understand and process all of this information, and so we're here alongside you in the trenches to help you to sort it out. Again, as Cass mentioned, I'm Becky Smith. I am a partner in our water and public agency practices. And so we're going to shift gears just a minute here to talk about how public agencies are continuing to function in this new environment. This is applicable not only for those of you who sit on special districts, city councils, and local boards, as well as for those of you who are doing businesses with local public agencies. One of the major changes we've seen in the last week is in response to the competing pressures for public agencies to both maintain open meetings and transparent access to their business, as well as the need for securing public safety and social distancing. The administration has issued an executive order relaxing some of the Brown and Bagley-Keene Act's requirements for remote participation in public meetings. So, as you all likely know, public meetings need to be of decision-making bodies like your city councils and county boards of supervisors, need to be open to the public. The recent executive order has waived certain requirements related to teleconferencing to allow you to complete these meetings entirely by teleconferencing. This means, for example, that public agency members board members may call in to a remote number. They no longer need to be posting the location that they will be calling in from. They no longer need to be participating from the jurisdiction. And new as of about 2 days ago, they no longer need to provide a physical location for the public to show up to participate in that meeting. However, if you are going to be using an entirely remote access version of your public agency meeting, there are a few things that you need to make sure that you accommodate for. The first is that you need to make sure that the public access, whether you're going to be doing it through Zoom or GoToMeeting or a teleconference call, does not need to be video, by the way, can just be audio, that you provide the information related to how the public will access that meeting and participate in that meeting on your agenda and on any notice that you're providing for your agency's upcoming meeting. On that notice, you are going to provide not only, for example, the call-in number that the public can use to participate in the meeting, but you're also going to notify the public that the agency, and if you don't already, we want to get one, has a procedure in place for the public to both raise any requests for accommodations under the Americans with Disabilities Act. So, for example, hi, I can't participate in your call-in meeting because I'm deaf. What kind of accommodations can you make for me? A procedure not only for raising those issues, but also for resolving those issues. One simple and streamlined example I'd suggest to you all in your agency agenda language is to provide, for example, if you have a request for reasonable accommodations under the ADA, please email XYZ email address here that will be monitored during the meeting so that we can look at and accommodate your request. We recognize this is a changing time and a changing environment. So if you're putting out a notice for your public meeting and the method by which the public can participate will be changing, for example, for those of you who are having meetings in the next week and are suddenly under the governor's order to stay home, you may be going to an entirely remote meeting. You need to provide prompt notice to everyone that you will be offering a remote participation option. That can be done by putting it on your website, sending an email blast, but it needs to be available if the public's method of participation changes. Another thing to note about these remote participation options, some practical considerations. If you are an agency that will be doing a remote option, you need to put parameters into place to, for example, make sure that your closed sessions remain closed if you need to speak confidentially with your attorney. You also want to make sure that you have a clear procedure in place for the public to be able to provide comment. The example we gave before about, for example, offering an email address the public can email their comments to is a great way to streamline that. You want to be able to put a structure in place so that if you do offer a teleconference option, you can still continue to conduct business without everyone talking over each other. So consider that as you're getting ready to make that transition. One also important note, if you are going to be participating in a remote meeting, although many of the requirements related to teleconferencing under the Brown Act have been waived, your boards still need to be engaging in a roll call vote for each member. And so we want to make sure that we are continuing to participate that and keep track of who is participating in the meeting. The other major issue that public agencies this week are struggling with, as many of you are both the county-wide and statewide shelter-in-place orders. As many of you know, the governor last night issued Executive Order N3320. We will be sending out an e-alert on this with some links and information on it as well for those of you who haven't had a chance to read it yet. But that order directs all Californians to stay home. The limitation here is that they are to stay home except as needed to maintain, quote, continuity of operations of the federal critical infrastructure sectors. There are 16 of those sectors, and there is a link provided on the order that will send you straight to a list of those sectors. They include, for example, looking at the participation list we have here, manufacturing, food and agriculture, government facilities, dams, and flood control. The question here for folks who are working to comply with this order is, what activities, even if my sector is included, what activities am I currently conducting that are needed to maintain the continuity of the sector and my operations? This is important for public agencies who right now are trying to make sure that they continue to provide you the water, utilities, flood control, fire, that you ordinarily receive. But also it's important for those of you who are in the supply chain, in manufacturing, in healthcare, and in many other areas. Here we expect to see from the governor shortly some additional guidance about what the expectations are and how this order should be read. But the most useful guidance we have so far is actually a federal memorandum of the same date. And again, this will be provided in the e-alert as well. A federal memorandum of the same date that helps to give guidance, and it is entirely advisory, helps to give guidance on what exactly is critical infrastructure and an essential employee. As expected, you'll look at things like hospital staff being critical, but also those folks who are working to supply grocery stores with food are going to be under that designation. We encourage you to take a hard look at that as you look to how you may need to modify your own operations and providing services, both in the public sector as well as in the rest of the economy. And I think that about wraps it up, unless Cass wants to provide anything else on this new executive order, and I can turn it over to Aaron. So.
All right. Hello, my name is Aaron Johnson. I'm an attorney here with Downey Brand. I probably should just say ditto with everything else that's been said as far as, we too are trying to drink from a fire hose here and trying to understand everything that's going on and the implications. What I want to talk about is a few things that have been addressed and are still being addressed as far as tax and economic relief. We have a few things that have come down from the IRS, from Congress, and then we also have a few things that are being discussed right now among the Senate, and I'll get to those. The one thing that you've probably seen in the headlines is making everybody giddy is that we have an extension on the filing date for tax returns, being pushed back from April 15th back to July 15th. Now, I will say that a statement was made by the Treasury Secretary, not official notice, it's not an official statement, but it's most likely it will happen. Initially, Governor Newsom had granted an extension to June 15th, and then the IRS came out saying tax returns needed to be filed by April 15th, but payments had to be done by July 15th. Now we have this announcement today saying that they'll push all tax returns to be filed by July 15th. And the state, California Franchise Tax Board, will conform with that, and so their filing due date will be July 15th. That means we will have, for the IRS and for the state, we will have filing and payments due on July 15th. The other extension on that is not just for income that's due for 2019, but that also includes estimated payments that are due on April 15th. Those will be pushed back to July 15th as well. The other tax relief that has come our way that has actually been approved was in the second phase that came about that Cass was referencing, and that is for the family leave and the sick leave, the emergency family leave and the emergency sick leave that's now being provided. You do get as a business, you get a refundable tax credit for the amounts paid. There is a limit to it, and it's up to about $511 a day under the sick leave, and it's about $200 a day for the family leave credit. Now, how that's going to work, there tend to be other limits in place with that. The more I studied it, the more I went cross-eyed with it, because with these, when you have tax policies put into place or tax credits given, not always thought through and before they get pushed out. So there will be I'm assuming there will be some guidance provided by the Treasury Department as we go on to help define that. Those are the reliefs that have been definitely provided, but I wanted to discuss as well what's currently going on in the Senate, because most of them will pass down and they will affect businesses and individuals. Just taking a step back, looking at the timeline here, there's been 3 phases so far in what the Congress has done. The first one was done there was a package that was passed and is mainly focused on providing relief and funding to federal healthcare agencies. And the second one is the one Cass was talking about, the Families First Coronavirus Response Act that was passed on Wednesday. That focused on businesses and individuals, more, employment side. And now we have what's in Congress right now in the Senate. It is the Coronavirus Aid, Relief, and Economic Security Act, shortened to CARES Act. And let me just tell you a little bit about what is involved in that right now. There are 4 major priorities of this act. The first one is a direct financial help to Americans. The second one is to provide relief for small businesses. And the third one is to provide relief for impacted industries like the airlines. And then the fourth one is to bolster the healthcare system. Now, let me just talk about what some of these provisions are in this package. There are, if you want to print it off for some light reading, it's about 250 pages. However, within the next 24 hours, it is going to be amended and changed. You need 60 votes in the Senate to get this approved, and so this is going to have to be a bipartisan effort on this. So far, the Democrats have not provided any input on the bill. However, they have said that they're looking to even broaden the impact of the stimulus package that's coming out with it. So here are a few of the things that are being provided. One that's getting probably the most news is the recovery rebate checks, which is up to $1,200 for individuals, so $2,400 for married filing jointly individuals, and that also is $500 for every child. There is kind of a cap on that. If you have $75,000 for an individual, then it starts to fade away, phase out, to where if you have a total of $99,000 as an individual or $198,000 for joint filers, then you won't be seeing any of that money. So the intent is to make sure that you are getting it to the individuals who need the extra cash and need that help. The amounts, the $99,000, the $198,000, those are based on the 2018 tax returns. Another provision that is in this CARES Act bill, it does officially extend the filing date to July 15th. And I will say, just kind of as a note, even the Treasury Secretary is encouraging people to still file their tax returns, even if they, especially if they need a refund, to be able to claim that refund to kind of put money back into the economy. But the other thing that this bill would do is it would postpone estimated tax payments until October 15th. So any estimated tax payments that are due between once the act is passed and October 15th would not be due until October 15th. There is also a special rule to be able to use, pull up to $100,000 out of qualified retirement funds without any 10% early withdrawal penalty. But the amount has to be used for coronavirus-related purposes, meaning you are infected, your spouse or child or dependent are affected, or that you've experienced some tax or some financial hardship because of being quarantined, being furloughed, laid off, whatever it may be. And so you'd be able to pull up to $100,000 out of a qualified retirement. Another provision is to allow partial up to $300 as a deduction for charitable contributions, even if you are not itemizing your deductions. And then there's also proposed a delay of payment of payroll taxes, and that would include for any payroll taxes could be split up and paid over the next 2 years to be due in 2021 and in 2022 as a way of stretching out the payments and making sure that there is enough cash flow for businesses. That's obviously the focus there on the individuals. The other thing, just so you're aware, is the proposal also includes a $208 billion set aside in loans to help the affected industries, which is about $50 billion to passenger air carriers, $8 billion to cargo air carriers, and about $150 billion to other eligible entities. And these are ones that have been affected directly because of the coronavirus. There is also a $300 billion set aside in loans to help small businesses. Now, it has been emphasized that these are not to be bailouts. These are to be loans that are to help these businesses and these industries. And so they will be paid back. There will be, reasonable interest on these amounts. But it's, and there's also going to be some strings attached, which there usually are in these types of situations. One of them so far is that you have to make sure that there's no increase in executive compensation or any golden parachutes if these loans are being utilized. And then, so that's where it's at right now. These amounts, or this bill was handed over to the Democrats this morning. They are working through the weekend to provide their insights and to come up with something to get over to the House. Like I said, the Democrats do want a broader phase 3 on this. They also want, there's been discussion that they want to boost the infrastructure spending, expand even Social Security benefits, and then there's also discussion of making sure there's funding for states to set up an all-mail voting system if this pandemic gets all the way to November. So anyways, that's where things are at right now. Still, we'll see what the weekend brings before we know what's been finalized.
Thanks, Aaron. Good afternoon, everybody. Again, my name is Jamie Dreher. I said hello at the beginning of our discussion. I'm a financial restructuring and commercial law lawyer. I'm going to talk about maybe some disconnected issues, highlight a few recent developments, but then maybe also talk a little bit more generally about positioning your business in an appropriate place under current circumstances. There's obviously a lot of economic uncertainty. There's a lot of businesses that are closed that will not see revenue for a month, maybe 2 months, maybe longer. For a lot of small businesses, that unfortunately might well be the end of them. I'm especially thinking of restaurants, and then obviously the hospitality and travel industry hit on by Aaron is going to be facing some tribulations, and to the extent the government assistance helps with that, we shall see. We've got a pretty diverse set of attendees at this webinar. There's a fairly interesting mix of public agency folks, small private businesses, large private businesses, nonprofit associations, which is really interesting because it seems like the subset of this list is exactly a subset of our firm's client base. And so some of these things I'm talking about may not be of specific interest to your public agency work that you're involved in, but I'm pretty sure that you live in a community and you know business owners, and so hopefully some of these issues might be of some assistance. Up on the slide up there on my agenda, I did raise the new SBA loan program. Before I get into that, I do want to talk about what is happening right now with the interruption in revenue, and it's going to happen, like I said, either immediately to restaurants and other non-essential businesses that just have to close, will not be generating any revenue. For other types of businesses, as we move into this new telework environment, the delay in receivables maybe will get a bit longer. I think that companies aren't generating revenue right now, depending on what type of industry you're in. Let's say the service industry, that comes home to roost about 90 to 120 days from now, depending on your cash cycle. What's most important right now, I think, for if you're running a business, is assessing your access to capital. It's very important. We've already been helping some people with, and helping or not, I'm aware of small to large businesses increasing lines of credit, from a small association I work with that increased their, operating line by $250,000 to, I read in the newspaper, the NFL increased their operating line of credit from $550 million to $1.2 billion, something along those lines. And that is just, a striking example of capital is going to become very important. Capital appears to be available right now. The government is injecting funds into the banking system. Banks are lending. Look at your own capital needs. And I think to start, what's important is building, if you haven't done so yet, a 4-week cash flow projection, a 6-week cash flow projection, a 12-week, maybe a 6-month, taking into consideration, you know, best, worst, and middle case scenarios. You know, demand for goods, certain goods is going to drop. One example is what I just learned of about 10 minutes before this webinar started is we have a client that is a large manufacturing company that sells its goods in grocery stores, but the distribution system is stopping shipping all non-essential and core goods to grocery stores. So all of a sudden, in about a day, this fairly large company has no way to get its goods into stores, and that's a rather immediate problem. Depending on what your service is or what your goods are, I just wanted to throw that out there as an example of it. Just kind of struck me as, it's going to be very difficult. Obviously, taking a look at your expenses. Working with Cass Farinini here on employment benefits, those being provided by the government, those that the government is asking employers to provide, has got to be part of the calculus. But in addition to that, businesses who are being affected should consider reviewing all expenses, including non-essential expenses. Call your bank, look to increase a line of credit. Start with your bank first. There's a couple of new loan programs that you probably read about in the news, and I just wanted to mention a couple of them quickly. One is there's a new SBA loan program being rolled out, the Small Business Administration, which is called the Economic Injury Disaster Loan Assistance Program, the general terms of which are loans of up to $2 million are being offered to provide economic support to small businesses to get over what is likely to be a temporary loss in revenue. The use of the loan proceeds is pretty broad, can pay fixed debts, payroll, accounts payable, and other bills, and there do not appear to be a great number of restrictions. Interest rates are 3.75% on those up to $2 million loans for small businesses, and 2 3/4 points for nonprofits with long-term beneficial repayment plans. The one thing I wanted to note is when the program was rolled out earlier in the week, a precondition to qualification for these loans appeared to be a demonstration that your state or your area was affected by the virus and or government activity related to what's happening now. The update is California is now on the list. If you're in California, you have automatically, according to the SBA, satisfied that precondition. You can apply for one of those loans. There's lots of other SBA loans available, some that can be turned around in 3 days, up to $350,000, for example, that on a 7-year repayment plan. And the SBA has assured about a 36-hour approval and denial process on those what are called express loans. Interestingly, for those of you in our area, in Sacramento, the city of Sacramento rolled out a $1 million fund, which they're offering to small or micro businesses. It's a $1 million fund total, but offering loans of up to $25,000 per business are available for small businesses with up to 25 full-time equivalent employees. Repayments don't begin until 120 days after the emergency declarations are lifted. They're interest-free. The city has guaranteed that a quarter of that $1 million in loan funds available are going to be made available to businesses of 5 or less employees. I suggest if you know somebody or you're in that type of business to jump on something like that. It's liable to go quick, and this is specifically the city is targeting retail, restaurant, service, or entertainment business with a storefront or a daycare establishment, including home daycare establishments. Something to pass on to your friends and community members and families. I was going to briefly talk about and get into insurance issues. today. I'm actually going to pass on that. And the reason is because, one, we're running short on time, and two is because our resident insurance coverage expert and the managing partner of our Stockton and Central Valley offices, Anthony Vignolo, is going to be talking in great depth about those details at a webinar a week from today. Some of the topics will be business interruption insurance, event cancellation insurance. The only thing I would mention about insurance is I would note that the insurance commissioner for California has asked insurance companies to put a 60-day moratorium on insurance premiums due on all companies providing insurance, admitted or not, in California, including life, health, auto, property, casualty, and other types of insurance, and asking insurers not to cancel coverage for non-payment. We're running short on time. We did have a few questions, and I'm gonna leave you right now. We've got some questions on the board. We're not going to be able to get to all of them. I think, Cass, there was a couple of employment questions that we're going to be able to address.
Yeah, sure. So one of the questions that was asked was, should businesses have a telework agreement with exempt staff? I think there should be something in writing. I can tell you that here at Downey Brand, we have a telework policy with our exempt staff. And the reason that we have that is because, as a general matter, attorneys, most of our exempt staff is attorneys, and attorneys tend to work all over the place just because of the nature of what they do. So we have a policy for that. But if it's not ordinary for your exempt staff to telework, an agreement that is a short-term agreement for purposes of this pandemic phase may be your best bet. So it's a judgment call with respect to that question. Becky has a question.
Yeah, so we got a question, what sort of documentation is required to establish that your work is an essential business or services? Unfortunately, the answer right now is not clear. Several different counties under their shelter-in-place orders are making available written determinations that you are working in an essential service area. I'm also going to note here that sometimes the question is not actually the fact of where you're doing business or what business you're doing, but the actual tasks involved. So some of the federal guidance, which again is non-binding, but will be relied upon and continue to be developed over the coming weeks, is that when we're talking about essential services and essential goods being provided to the supply chain and to secure national security, national health and safety, we're not talking about continuing business operations as usual, but specifically those tasks that are required to keep those sectors whole. So, and you can expect further e-alerts and further information from us as those questions get developed.
All right, so I'm told that I can answer one more question. There's a bunch of questions. To the extent that you are a client with a question, feel free to email me or call me or communicate with me however you ordinarily communicate with me, and I'll try to answer your question. The question I'm going to answer, I'm trying to find one that is generally applicable. And I guess what I'll answer is, what would happen if an employer can't afford to pay 2 weeks for all of their employees? So as I noted, the Secretary of Labor is going to come out with some guidance regarding that, because the way the statute reads now is that the Secretary of Labor can exempt businesses if it jeopardizes the viability of the business as a going concern. So I would keep my eyes open for that. Also keep in mind that you have some benefits that are available from the state of California that you can apply to these situations or help your employees obtain in these situations. That includes state disability insurance if they're sick. It also includes paid family leave if they are taking care of sick people. And so that's all I can really tell you for the time being. Obviously, if it's a choice between violating the law or going out of business, you know, that's a choice that that you got to make for yourself. You know, I mean, if you're not going to be a going concern, then nobody is going to have a job. So, you know, I think to work with what you have, work with your attorneys, work with state benefits that can be provided, perhaps consider furloughs rather than terminations, things along those lines can help you keep your nose clean in this circumstance.
Thanks, Cass. We're going to sign off in a second, and I'll just leave you with, one, thank you for your participation. Two, there's a lot of questions we didn't get to, but you do have the materials, and you'll be receiving some emails from us, so you will have contact information for everybody on this call to follow up on those questions at a later time. So feel free to do that. And then finally, we are putting together, we are planning on convening at the same time and place next week, a week from today, from noon to 1. Topics so far are more discussion of employment issues that are constantly evolving. One of our other partners, Elizabeth Stowler, will be talking about those. As I said earlier, Anthony from our Stockton office and our insurance coverage expert is going to be diving into a deeper dive of insurance issues. And then one of our family law lawyers, Kelly Pope, is going to be talking about custody and other issues related to what's happening right now with the shelter at home and things like that. So we're signing off, and thank you.